Okay.
So it's recording. See that? You're recording your screen right now.
Oh, man. Look at all that time wasted on trying to struggle with technical stuff I'm not skilled at, and missing out on that beautiful spy drop. Oh, I can't cuss on TV. Oops. Let's look
Well,
and see
actually,
what
yeah,
the...
you can. There's nothing against cussing.
Okay. Look at the level 2s. Oh, fuck. Oh, wow. Yeah. Shit me. What kind of news just hit? Oh, yeah. Okay. Oh my God, there was some bad news that just came in from one of the Federal Reserve guys. Look at that. He's saying that the large banks don't have enough capital and they should stop paying dividends and raise capital to increase their liquidity. Oh yeah, this is the Great Depression part 2.
Oh yeah, the Dow is fucking crumbling right now. Shit. I was telling people that this is what I've been. Okay, all of my math has been saying. I felt like I've been Chicken Little for like the last month and a half. You know, I've been telling you somewhat too. The last couple months when we talked, that I just feel like all the indicators we're fucked, but people in the markets are not reflecting that. And I thinking, am I crazy? But I keep thinking of that movie, The Big Short, that I'm glad you appreciate and you love so much. And so do I.
Oh,
that's
my favorite movie.
Am I that guy? Am I seeing what everybody else should be seeing? It's not even that complicated.
It's
they
really
just don't want to see it.
It's really hard when you live in a society of dogs, and you know dogs don't see in color, and yet we're the only dogs who can see this rainbow, and we're trying to tell all the other dogs that there's a rainbow there, and these are all the colors in it, and they're looking at us like we're nuts.
That's true. That's a good analogy.
That is kind of like what that is. Because there's a lot of people that are right now thinking, this is just some profit taking. No, this is not ordinary profit taking. Not with all of these other indicators that are happening.
Well, and you know what? I watched the live press conference with Trump yesterday, and he said, well, I believe, talking about the economy and recovery, he goes, I believe we're going to have a V curve, not just any V curve. We're going to have a super V. I don't know if that's a real thing in economics, but we're going to have a super V curve, I believe.
I
was like, I don't think this fucking dude gets it.
I don't, you know what? We know he doesn't know how to do Twitter. We know he doesn't know how to do the internet, okay? I mean, we're talking about somebody who tried to tell Jack Dorsey he's fired, and it didn't work, you know? Jack Dorsey, CEO of Twitter, telling him how to do his company. And, you know, so I wouldn't put too much stake in that because, you know, let's face it here. What we're looking at with the length of time that a lot of the people will not be reabsorbed back into the economy. They won't have jobs. They won't have incomes. Because government did not do the right thing, which would have been to pass a UBI 2 months ago. What's going to happen is the recovery is going to be very long and protracted. And it's compounded by a deadly virus that's a novel virus that we're still learning about, that the medical experts like Dr. Fauci and all these virologists, they dedicated their entire lives to learning about crap like that. And they're just learning it as it's, you know, as we're moving along because it is a novel virus. And it's mutating. So I think it would be an act of hubris, quite frankly, to say we're going to have a super V recovery. I don't think we're going to have even a V recovery. We'll be lucky if we have a W or U recovery. But I suspect we might if Congress does not do the right thing by bailing out the people, because it's the people that are ultimately, you know,
the consumer buying power. If we can't buy shit, it doesn't matter how much the banks and companies have.
Yeah, I mean, you know,
that's what they don't fucking get.
No, they don't get it. They won't get it until they're hit upside the snot locker with a hefty dose of reality check. And
by that point, it might be too late for us and the economy. That's my worry. Is Mitch McConnell keeps saying that he's going to wait until he sees if it gets bad. And I keep thinking, well, sometimes if you wait too long, sometimes it's too late. You can't fucking a little bit of a UBI by then may not be enough.
No. I mean, it's exactly right. I mean, you hit the nail on the head. It's called too little, too late. And as my grandmother would have said, weight broke the fucking wagon. They did.
It's like your roof. If we just dealt with the roof earlier, you wouldn't have such an expensive cost now.
Right. And what I'm looking at here on the news, and this is what a lot of people don't appreciate about Thinkorswim. This is why if you're on Robinhood or any of these other trading platforms.
I'm on Thinkorswim.
Yeah, I cannot imagine trading without it. I mean, I watch the guys on Market Watch and on, the CNN Market News, and you see these professional, big institutional traders. They bust out the Thinkorswim. They don't bring sticks to a gunfight. Yeah. And this is why
Every trader I know has said the exact same thing you said. You can't be a professional. You're hand tied unless you're using a good software.
I would not attempt to trade anything without this.
That's what the Robinhood app is dangerous that way, because it's allowing a lot of people that don't have very much education easy access. But at the same time, it's not giving them all the information or the same tools. And there was that guy just a couple days, or not pretty recently, that just committed suicide from a big loss on the Robinhood app. Did you see that?
No, I did not. And that kind of news is very disturbing and unnerving because, the market is a great tool to use to build.
Ariel's the one that just posted it. He posted it a couple days or yesterday on his Facebook page about the story. Some 21-year-old or 20-year-old that just lost all his money on the market and committed suicide.
I'm gonna have to grab Ariel's thing then, because you know what, I should invite Ariel on one of these live screencasts because.
We totally should.
Because
he says he wants to join. He talked to me this morning. He says he wants to join at the 35 level.
Tell him to come on.
Yeah.
Yep. Tell him to come on. Tell him I'm in the middle of learning how to do this screencasting technology because I'm not a digital native. I'm not technically smart. I'm smart at one thing, and that's reading candlesticks. And doing math.
There's a lot of things that we're all not very smart at, but it takes a village,
Right, and it's like this thing that I'm doing right now. This I am smart at. I also am very experienced at. And I always tell people before you place any trade, paper trade first. Paper trade using this tool, and build up practice. Build up practice and get proficient at being consistently profitable. I don't give a shit if all you make in a paper trade is $50 a trade. If you can become consistent at that level and consistent with paper money, you can then become consistent with live trading, with live money. But
it's interesting to say that because all of the people that actually know what they're doing trading, they say the exact same thing. Do that practice one first.
Yeah. Because you know what? The market is a very hard taskmaster, and it is not forgiving.
Well, this is how lazy I am, and I told you. I have over $100,000 in the market, and it's all just in the Dow. So, I know I'm lazy, and that's stupid, but I've made a lot of money just riding the whole fucking market.
Okay, let's switch to the Dow, and we'll show you what diamonds are. That's the ETF that tracks the Dow. And that's what that looks like. We just brought that up. Now, we're going to pop open our trading tab here. And we're going to go out. We're going to go out probably 21 or 28 days. We want to go out 3 weeks minimum. And we're going to look over here. You see this grayed out area? Well, it looks kind of purple. This is the puts column, and a put is what you buy when you see that the market is tanking or about to tank. This is how you make money on the downside. Now, if you buy like right here at this first one in that's shaded, or this one right next to it, that is called at the money. That is a put that is at the money. And just like over here in this column with the calls, this is at the money. Now, to protect what you've got invested, I'm assuming you are long in your positions, that you're not short. You should stock up.
Yeah, they're not options. Yeah, they're just all just hold and long investments.
Yeah, stock up. Yeah. Stock up on some serious ass puts, and move some money from stocks into cash. Because rule number 1 is always preserving capital. That means you always got to keep some of your powder dry.
Because my dad passed, sadly, as I have a bunch of cash coming to me that I don't have access yet. Otherwise, I'd be able to help you even more than I can now. But also, I have all the stocks right now. So I have cash and I have stocks and I have real estate and I have some other investments. So I'm really diversified. I just need to fine-tune things more, I'm just a lazy trader. I just put all my money in the Dow and just let it run. But I'd like to freaking take a little bit of cash and almost just not necessarily for fun, but more of gambling or more willing to lose it all and take some of it and do options and penny stocks and other type of trade.
Well, here's what I would look at for right now today. I would look at going out as far as 35 days. That's a little over a month. And what I would seriously consider is buying an at-the-money put or 2 or 3 or 4. I mean, if you have a couple $100,000 in there, you want to protect your capital. You don't want to sell your stocks at a loss, but you want to hedge against them. So you want to buy enough of a hedge so that this drop does not eat your breakfast, if you get me. And this is what I was telling James last night, that because I told him, I said, do you know what your 401k is in? And he doesn't, and I said, well, you better get online and check, because if your employer controls what your contributions get put into, you might need to move to a cash position, because you can always move back in to the stock market, into individual stocks or mutual funds later. But if you ride this thing down like a 60-point drop, and when I say 60 points, I mean like 60 of these bars, 60 of these candles. It will take the amount of resistance you would be up against for recouping that is just, it's not going to happen within a timely fashion. And you can't afford to be 50 or 60 and flat broke. So this is why I'm saying I would strongly, if I had your position, if this was me, this is what I would be doing. Okay? I would be loading up on some puts as a hedge. And I would be looking at what stocks I can ditch so that I have cash. Because cash is always king. And now you want to be careful, because options are a leveraged instrument. This implied volatility, while it can be your friend, it can also bite you in your ass. So you don't want to over leverage your account. But what you want to do is you want to hedge what you've got, and you want to do some salvage before it gets too late and it drops too far.
So I don't mean to cut you off, and I appreciate everything you're saying, but my position is really similar to this. I'm in a position where I am very diversified. I have a lot of diversification. I have cash, I have stocks, and I'm just really just trying to look for ways. I want to quit my job, like I keep saying.
Right.
I'm looking for ways that I can get a small additional revenue streams with the investments and diversification I already have, and just tweaking it a little bit and paying more attention. And I'm not really worried so much as like if the stocks dropped a ton, 60 points or whatever, that wouldn't shake me. For example,
well, when I say 60 points, I'm not talking about the index. I'm talking about the ETF, the Traxy index, which would be an equivalent to like a 2,000 or more point drop.
Right. Let's say if it dropped 60% though, which would be even more than that. Let's say if it dropped over 50% of my savings, I still wouldn't be. I'd be okay. Like that whole thing is just long term. It's for when I get to be 60 or 70 or whatever. You know, the money I have that I'm more wanting to do with options isn't to like leverage against that or hedge against that. It is more like, okay, let's just pretend this is just freaking free money, and I want to use this as like, you know, to be able to help more people like you and to be more self-sufficient and quit my job and just to have a few $100s like you're doing in revenue every week. I'm not really doing this to offset any of my other investments. Like those, I don't even care. They're already offset and diversified.
Okay.
This is like, I'm looking at this as more as like, how can I try to do, you know, make a living off of this or add to my revenue?
Well, this is how you can trade options in and out of options, and capture some really nice profit that way. And you don't need to do anything fancy. You don't need to worry about iron condors or butterflies or short or long strangles or straddles or spreads. You can just do single options contracts, but you have to learn how, and that's why I included Steve Neeson's Candlestick course book at the Patreon level of $35 a month or more, because that is a good starting point. Because
so I need to read that.
You need to read that, and you need to learn how to read these lines. Like this purple line here, I have mine set up. This light blue line, this is the 13-day moving average. This is what I custom set my charts at because it gives the most accurate snapshot for options to my liking. This yellow line is the 30-day moving average. This like hot pink purplish kind of line, that fuchsia colored line, that's the 200 line. That is a line that shows long-term trend. That is also a major point of resistance as well as support. If you're below that line, it's going to be a barrier. It's going to be resistance because, you know, when the market tries to come back up. But when you're above it, it's a level of support. And in reading these, what we're looking at here, like for example, today's drop, right before the drop, you see this cross? This is what we call a death cross. This is where my 13 line crossed, you know, below the 30 line, and then both the 13 and the 30 crossed below the 200. So we've got a double death cross going on here. And you see what happened. The market dropped. Now it's trying to come back up. Today is not a normal day. Today is what we call the Quadruple Witching Day. It's a very important day in trading. Traders usually love this day because there's an extra amount of volatility due to the fact that options expire today. It's not just options. It's also the single stock options, single stock futures, index options, and index stock futures. They all expire today. And whether or not the holders of those contracts roll them over or let them expire worthless, that will dictate where the market goes from here. But there's a lot of other things that dictate where the market's going from here right now. Because popping open the news widget on Thinkorswim, you get all this news, up-to-date news, from the Federal Reserve to President Twitter to, sorry, I meant President Trump. Did I say President Twitter? But all these things that affect the market, you know, where you have earnings reports that are released, that there's a company that, you know, like one of the FANG stocks, the FANGs, when one of those move in any given direction, they bring the whole index with them. So having an option, if, you know, like today, if I would have gotten in on this, but I couldn't because I have to conserve, pattern day trades, I'm under $25,000 limit. I would have jumped in right here as soon as I saw the first death cross. And this first red candle got in here. And you see here it would have come up a little bit. But you see right here, we've got the moving average lines coming down below the support level, which is a 200 line. And then it continues down. It's like it went up and said, nah, fuck you, and started to go back down. this is what, why people think trading in a bear market is just as easy as simple as short selling. No, it's not. Because this is not a straightforward drop. You can see the way this is going, that this is coming up a little bit. It's like teasing us. It's saying, well, I might come back up, or maybe not. And with all of the underlying fundamentals and the technicals preceding, be other than the fact that we're on a quadruple witch day, show that we're like in for a bumpy ride. We've got the rise in coronavirus, and even though states may open businesses, there is nothing any elected official can do to force people to go out to restaurants, shopping malls, bars, and if people are scared, if this comes back, they're going to stay home, and they're not going to go out if they don't have to. If they don't have to leave, they won't.
Okay, so here in Phoenix and in Tucson, we've had a number of restaurants that they demanded they wanted open. Sorry to interrupt, but they've opened, and then now the staff and the cooks have gotten sick, so the whole restaurants have had to shut down, and now they can't even do order out of those restaurants.
That's right. That's the kind of stuff that we're going to be seeing.
So it's even worse than it was the first time. I'm like, see, this is what happens if we don't listen to the fucking experts.
Yeah, I mean, every disaster movie always starts with either some government nitwit or some corporate nitwit refusing to listen to the scientist. Every one.
That's true.
Every one I've ever seen.
Even Independence Day with the aliens, all of them. The government people don't want to listen to the experts.
Yeah, I mean, the movie Absolute Zero, which is about a paleomagnetic reversal that results in the Earth going into a deep freeze, like 60 below zero deep freeze, and moving the polar ice caps to the tropical zone, and making the polar regions tropical-like climates. I mean, it was a very violent paleomagnetic reversal, and it was caused by a desalination of the ocean's currents. And, it was a really scary...
Well, supposedly scientists say that is going to happen, and it has happened before, and it does happen to the Earth. The poles do switch.
Yeah, I mean, now, polar reversals happen periodically, and we don't really notice them. It's when you have a very violent, rapid reversal that, yeah, you're going to notice that shit. You know what I mean? And we call that phenomenon a true polar wander. That is where the magnetic dipole moment flips so fast that it causes the tectonic plates to literally violate the tectonic plate speed limit, and it caused the continents to shift and form. It caused magnetic north to go south. I mean, magnetic north hauled ass.
And they say it's close to happening again, or there's indications that it's going to happen again.
Oh, yeah. Now, that movie, began with the government guys not listening to the scientists. It's the same thing with the markets. And people make up the market. The economy is us. And when you have a lot of people who are trading and investing, and they're not rational, they're thinking, oh my God, I've got to buy the dip and sell on the rip. This is a buy. We bottomed out. We're back in a bull market. All the government guys are saying we're in the clear, and it's, we're on our way to recovery, and unemployment isn't as bad as we thought it was. Well, I beg to differ. There's a lot of things that were not included and taken into account, such as that there was already a mounting and growing contingency that had been permanently pushed out of the economy since the crash of '08 and were never rehired, largely due to age discrimination and largely due to automation, with a lot of those jobs being automated away. So it's one of those things where we can see this. We're like the dogs that are seeing the rainbow, and everybody else is poo-pooing it, and saying, "What are you guys nuts? There's no red and green things there. What are you talking about? There's no rainbow." And we're like, yeah, guys, yeah, there is, and this is it. And now today, we don't know what the market will look like by the market close. But I don't want to sit on a trade over the weekend because things are just way too unpredictable. And when you've got a lot of irrational decisions being made, it can really steer the market in a way that it will bite you in the ass. And options are highly leveraged instruments. So we have to be directionally correct as fuck. That means if we jump in on puts here, we got to make sure that Monday it's going to continue going down. You know, that is what trading is. It's not.
You know, a lot of my friends say the same thing, even when they're not trading options. They're saying that they don't like to hold over the weekend very often unless, you know, they're sure, because it's very dicey. And
Yes.
they say that they love their favorite thing is to get in early in the markets, right when they open. Usually earlier in the week, the better, but anytime early in the morning. And then, you know, cool off as the day goes on.
Yeah, normally
general.
on Fridays, like today's the Quadruple Witching day, we could see a surge in buying. We had a sell imbalance that's the gap on that starting to close. And so we've got the Quadruple Witching thing going on where there's going to be contracts that roll over. You know, they get rolled over to a future date. So where this market lands, we don't know. We know that right now it's below the 200 line. And from all indications, I would not be surprised to see Monday or Tuesday where we start to drop. And I was telling Angelo and James, I said, you know, Angelo thought it would happen later on in July when people were losing their unemployment benefits but had no job to go back to, but their unemployment benefits were, you know, kaput. And I said, no, I think it's going to happen before that because we're seeing news of a resurgence of COVID. And we have a government that is saying we are not shutting down the economy again. That's fine. They can choose not to do that. But there's nothing that's going to force people out of their homes if they're too afraid to come out. If you're too afraid to take your family to the movie, to dinner at Olive Garden or Red Lobster or wherever, you're not going to go. Doesn't matter. You know, doesn't matter. People, when it comes down to it, the first law of nature is self-preservation. And most people do not want to, you know, risk themselves or their families' lives. They just don't. Doesn't matter what's on the menu. So today might just be a hint. We might get what we call a lifeboat where this swings back up at the end of the day. And if it does, I hope that James and Angelo, if they have 401ks that are in mutual funds, that they move to a cash position and just hang on. And, you know, look and see what the market's doing Monday, and then maybe jump on a couple of options, no more than 2, because position sizing matters. You don't want to overly leverage your entire account, and you want to keep most of your powder dry so that if you have to turn around, if you have an options trade that does move against you, you can get out of it and recoup the loss and overtake it with a profit by making a different trade. So it's important to position size and not have, you know, too much of your account tied up in either, you know, equities or options. You know, you want just the right mix. You want to keep a lot of capital on the sidelines so that you have money to work with to move. And when I say move, I mean move like shit through a tin horn. Because the markets in this kind of volatility change direction very, very quickly. Now, people who are long-term investors, maybe they're not worried about it because if they're 20 or 30 years old, yeah, they've got 30 years to recoup. But people in their 40s and 50s who don't know if they're going to have a job to go back to, whose 401ks are already getting battered, I'd say moving to cash is probably the smartest thing that they can do temporarily because you can always move back into the market later on. It's just getting through the really rough periods so that you don't lose your shirt. Because if you have too much resistance to overcome when the market is trying to recover and come back up, it's a whole lot of resistance that's going to take a whole lot of time. And that's why with options, you've got to be careful. That's why I always tell people, if you're going to trade options, at minimum, you don't want any fewer than 21 days out. You want to give yourself and your trade 7 days, so that if the trade does move against you a little tiny bit, you can ride it out for 7 days, until unless if it hits your loss limit, what you're willing to tolerate. Now, my risk tolerance is very low, obviously, and I'm a small account trader. I don't have a lot of money, and I have to be very prudent and preserve my capital. So my risk tolerance is very, very small. Your risk tolerance might be larger. But what counts is that your individual rules as a trader for what you're willing to tolerate risk-wise, and where you're willing to cut bait and, get in and back and trade something else later on, is entirely dependent on your risk tolerance level. But the key to making money in trading options is, number one, trading far enough out in an expiration date that's not going to be, in 2 weeks or less. And the second thing is not loading up on too many options at one time. And the third thing is minimizing your loss by managing your risk. That means if you, for example, have a firm rule as a trader that you're not willing to take any more than a 20% loss on any one given trade, that means that if you were in a trade that lost 20% in today's trading session, you cut bait. And if it then moves back in your favor, yeah, you're going to cuss and you're going to be pissed off. But here's the thing. The market will always bring you a trade. But you need to manage your risk. You need to manage your risk and minimize your losses, because you will have profits that overtake your losses as long as you stick with your rules as a trader. Don't deviate from them, and do not let another trader knock you off your game. It's not their money at risk if you get knocked off your game. It's yours. Remember that.
Right.
And remember that well. So 9/10 of this is risk management and discipline, emotional.
So can you help me quit my job if I were to take, a few $1,000s and help me quit my job, so that I don't need to be a millionaire? I'm not trying to say that you'll make me rich, but make me, a couple $100 every week so that I could just quit my job?
Yes, I can. I can do that. I can't guarantee you results, but what I can guarantee you is I can show you how I trade.
Nobody can.
I can show you how I trade and say, look, this is what I'm doing. You might need to tweak your style. It might be different than mine, because every trader is unique. What I can do is provide you with the trading education, and I think the best place to start is, number one, everybody should learn how to use the Thinkorswim platform. And instead of fucking around with a platform that is too difficult to use, like Interactive Broker, which, if you can't even figure out how to get on their damn thing.
Are you looking at my screen?
What's that?
Are you looking at my screen?
No. Let me see your screen. Let me look. Let me find the tab. Let's see. Where are you at? I lost you, buddy. Okay. I'm seeing you. Okay. I can't see the screen too well, though. It's very blurry and grainy.
Yeah, Facebook is like that.
Yeah, Facebook is not a good medium for screen sharing. Zoom, on the other hand, is.
My point is you can tell it's the platform. It's Thinkorswim.
Yeah, and you can customize that.
Yeah.
You can customize.
I'm just letting I had it open. You were telling me, you were just talking about the platform. I was just saying, yeah, look at my screen. I'm using it.
Yep. And to customize it so that it works for you as a trader, that's the important thing. I have to go for a minute. I have to run a bunch of errands. Okay.
Can we pick this up later, or?
We sure can. Because
I have those Airbnb guests coming in a few days, and I have to run to the Home Depot and a bunch of places,
and you better clean that kitchen counter up so they don't grutz about that.
Right.
I mean, I know you're a bachelor and all that, but, you know, they may not be very understanding.
Yeah.
But, yeah, I mean, you've got a very nice house, and they're getting a good deal because they're getting a nice house to rent for a month with a pool. You can't beat that with a wet stick. I mean, come on.
Well, I'm charging them an arm and a leg, so I don't know how good of a deal it is, but...
Well, hey, you know, it's... Yeah. What's the rest of the market charging them, and what would they be getting?
Well, I put it above the whole market. I charge, so they're, for a month, I'm charging $4,200.
Yeah, and Tucson is, you know, that's a very popular place to visit. I mean, people... Yeah. That's a regular tourist day, especially in the winter.
Yeah. But, you know, you could probably find something for half of that easily.
Yeah. But if they're willing to rent from you for that, I mean, hey, you know.
Right. I just, you know, I live here, so it's like, in order to kick me out, you're going to have to pay me.
Okay, well, I'm going to let you go run your errands, and I'm going to see how to play this back since this was my very first screen recording using this particular software, and I want to test it before I upload anything to Patreon for the patrons that are signing up for Trader Education, because I feel an imperative to get Trader Education up there, and I mean serious Trader Education.
All right, well, you have a good one. Let's talk soon.
Yep, bye-bye now.
I'm already reading that book that you told me about the candlesticks. I have that up while you were talking, too.
Awesome. I'm going to be making and creating more articles with images and screenshots and loading that up into the library over the weekend. And if I get this, master this new technology with the screen recording software, I'm going to put that up on the market recap when I do my market recap. You know, after, you know, the end of Friday's close, which is today's close, and I'll be discussing the full week of the market, do the market recap for people.
Okay, sweet.
So
all right, well, we'll talk soon.
Okay.
Thank you.
Thank you. Bye-bye,
Bye.
Brian.